Where we are here is we're starting just around the middle of this area. So we just traded up 82s, and this is where you're looking for your short. You get this accumulation around about 78s, and what you want to see is that break, and that's going to give you your chance to go lower. So you know where your stops are. If you're looking for a short here, you've got to stop above the high. And what you're looking for now is selling to start going. Now we got through these 78s. So you trade down 76s. There you get a little sell into 76, 22 lots, but the bid gets absorbed, pushes back on up. So you're not seeing what you want. You're not necessarily going to have to be getting out of this just yet, but it's certainly looking like it's starting to struggle. If this is going to be a good reversal, you'd want to see this after it's pushed up, start dropping, and then the fall come quite quickly. You want to see new sellers who realise they're not getting these prices and sell it below 78, not buying continually coming in there and the market stalling just below the level. So you see it once again comes back down. And you actually find that it's not even dropping quite as far anymore. Yeah, it's 78s bids back up. We had seen it down towards 75s. Now it goes again, 77, 76 and a half. This is where it traded 20 something lots last time. Are we going to see any more selling? That's what you need to see. But any selling, we sold another 15, 20 there. We sold another 10. And every time that bid comes back. This is not a great sign. Yeah, this is where you start taking this information on board. And whilst I don't think you should be getting out of shorts just yet, because if this does manage to overwhelm that buy, and this will then drop. But we start coming back up, particularly we start getting back above this high volume, back above 80s, then you can start thinking, right, well, this is not looking great. You also see there, volume goes orange. That's showing that value's now shifted up as well. Which is another sign that if this is to be a reversal, you don't really want to see value shifting towards the highs. You see it's shifted towards the highs. VPOC's now right up towards the 78 area. So what you're seeing of trade, this is not looking great, but it's not saying get out just yet. Now because this is a VPOC as well, very well traded yesterday. So from that point of view, you can be thinking, well, if this goes through, there's no reason we have to spend a great deal of time there. So if it goes through the VPOC, you're likely to get low volume, and you're likely to get that low volume left behind. There's no reason to come back and trade that area. So that needs to be sort of going around in your mind thinking, right, well, if I see this low volume pick up through the highs, I'm going to get long. I'm going to get out of the shorts that I've got. I'm going to take a long on. Starting to tick back up. We're now trading 80s once again. Like I said, 80s really hasn't traded that much. We now trade above 80 and a half. There you get that quick jump up. And this is where in your mind you're thinking, right, 83s was the previous high. You've got some low volume. We've broken the VPOC. There's no real reason now that we should be trading back below these 83s. So if you got in very quick, bought those 85s, and this is the thing, you've got to react quickly here. Trade 83s, still can't really drop it back down. Yeah, that little flick down, very low volume, still left, even though it traded just below 83 and a half, very little traded. Yeah, still left 8 was all that was traded on the bid there. Then we start to tick up. 60 lots, takes it straight out. As soon as it's above it, we then see the buying come straight back in. So it's not then backing off below the 60s, and you can even then try and have a go at buying it around those prices where the 60 came in. In terms of target, like I said, you've got this high volume up here. This is an area where we may well spend a bit of time. So if you want a target up to that point, you can then think, right, maybe we're going to see a little bit of a dip back down, try and fill some of this volume cave in. And what you got to be thinking, you always plan in this cut and reverse. That allows you to take that trade on with confidence. You could bought those 85s, you were losing maybe 5 ticks on your shorts, but by getting long, being confident on that move, expecting that low volume is going to be left, you then are able to get on the move that takes you a full 20 ticks to the upside. That very easily recoups what you would have lost on the 5 ticks being short the 80s. So good trade to start with being short, but once you start getting those clues, that's where you start planning for the potential of a cut and reverse. And also not just how you're going to execute it, but also where you think is next going to move to. Because if you've cut and reversed, it's very easy then to start going, well, I've made back the money that I've just lost, I'll take the profit. And as soon as it traded through 90s and it stalled a little bit after trading that 60 lot, if all you were thinking about was recover what I've just lost, you then end up getting out quite quickly and not maximising the trade and running it right the way up towards that high volume, which came in around about 3-4 area. So just a little look at how to actually execute a cut and reverse trade, and then also plan how you're going to get out of it, where you're going to get out.